So this is my prior transaction where I had invested $50,000 to AppleSeed Enterprise and I bought 50,000 shares at $1 per share. Now, after investing $50,000, I realized that this money is not enough to start the business. I need more money. So there are different ways I can raise money. I can take bank loan. That means I can go either through debt or equity. So here I have decided to go with equity and I'm going to sell 1,50,000 shares of AppleSeed Enterprise at $10 per share. Here you can see this is the number of shares. It is 1,50,000 or 150,000 shares which I am selling at $10 per share. $10 is the market value of each share of AppleSeed Enterprise. Here you can see the par value of each share is $1. That means still the face value of each share is $1. Now this will bring an investment of $1.5 million to AppleSeed Enterprise. Here you can see 150,000 shares multiplied by 10, which is $1.5 million. Now let's see what are the entries I need to make in three financial statements for this transaction. So let's go to the income statement. So this is the income statement. Do I need to make any entry in this income statement for the transaction? The answer is no. I don't need to make any entry over here because there is no sales, there is no cost of goods sold, there is no expense for sales and marketing, there is no expense for research and development, there is no expense for general and administration. That's why I don't need to make any entry in the income statement. Now go to the next statement, that is cash flow statement. Do I need to make any entry over here? The answer is yes. Here you can see I had invested $50,000 to AppleSeed Enterprise. This is my prior transaction. So I am moving this one in my prior column. This is my prior column, which is $50,000. Now here the current investment is $1.5 million. So I am adding here $1.5 million, which is the current investment. So I am making an entry against sales of capital stock and the total amount is $1.55 million for sales of capital stock. So this is my ending cash balance, which is $1.55 million. Now let's go to the next statement, which is balance sheet. So this is balance sheet. Left side is asset, right side is liability plus equity. Do I need to make any entry over here? The answer is yes. Here you can see I had already made $50,000 investment in AppleSeed Enterprise. This is my prior transaction. So I'm moving this one to the prior column. Now the current transaction is $1.5 million. Mhm. So this is the current transaction and the total cash is $1.55 million. There is no account receivable, there is no inventories, there is no prepaid expense. That's why the current asset is $1.55 million. There is no other asset, there is no fixed assets, there is no accumulated depreciation. That means the total asset is $1.55 million. Now let's go to the liability plus equity section. Here you can see my uh, investment is $50,000. That's why I had made an entry of $50,000 against capital stock, which is my prior transaction. So I'm moving this one to my prior column. This is my prior column. Currently, I am getting an investment of $1.5 million. So I'm making an entry over here. So this is $1.5 million. So total capital stock is $1.55 million, which is the shareholders equity is also $1.55 million, and total liability plus equity is $1.55 million, which is equal to the total assets. That means my balance sheet is fully balanced. Yeah. So let's revisit what are the entries I have made for this financial transaction. This is income statement. There is no entry for this transaction. In the cash flow statement, I made an entry of $1.5 million for this transaction against sales of capital stock, and then go to the balance sheet. Here I made an entry in both asset and liability plus equity section. In asset, I made an entry of $1.5 million against cash, and in equity plus liability section, I made an entry of $1.5 million against capital stock. So that's why the balance sheet is right now balanced, because the total asset is equal to total liabilities plus equity.